Sign up today for a 7-day free trial at alerts.chartguys.com. Hey everyone, checking in on cryptocurrency. So where we stand now, we have a lot to catch up on, but we are looking at a daily tightening equilibrium pattern across the board, and that tells us to slow down because action's going to slow down, volume's going to dry up, volatility is going to dry up, trading opportunity is going to dry up, and it tells us that we can potentially get some choppy action on the shorter term time frames while we wait for this daily chart to sort itself out. So we had a scenario going into yesterday or during yesterday where we had a clear 4-hour equilibrium. High, low, lower high, higher low, lower high. And we had a little bear break here. It didn't happen on every exchange, but it did happen on a bunch of exchanges where we lost 4-hour support, but quickly saw bulls buy the dip. And a general rule of thumb and a statement that we say over at the Chart Guys, and what we use for stock trading a lot of the time as well, is when you change a trend and do not get follow through, zoom out and look for the potential of a flag. And very often that ends up playing out. In this instance for Bitcoin, we saw that happen. At that point on the daily time frame, it certainly looked like a bull flag was forming. And we had the scenario where, okay, if the bulls can go on offense now, they played defense well, they broke support and got no follow through. Now we have to go on offense, break resistance to try and confirm the daily bull flag. At that point, the psychology of this pattern was a cup and handle, in my opinion, where you have the left side of resistance. The only way it wasn't ideal is it was a V-shaped bounce instead of a nice rounded U. But we had the left side of resistance, the low of the pullback, the right side unable to break the left side, healthy consolidation in a handle or bull flag pattern, same thing, and then the potential for that breakout. So that was what I was keeping an eye on, but we never broke the 4-hour lower highs. 83.15 is a lower high, 81.57, 81.13, another lower high at 80.44. So the bulls played defense well, but they could not do anything on offense, and then we rolled over and had a big bear break, big spike in volume, and as soon as that happened, that told us, okay, it is not a bull flag on the daily, in my opinion, and we're now going to be looking for this equilibrium to play out. As you can see, we are still grinding this daily 12-period exponential support. So that right now is a guide to be watching. We don't have to hold that level. That would just keep the bulls in favor. If we lose that level, it's still just anything above 6,600 to give us a higher low, and the bulls have a ton of space to work with still. So it's just a matter of when we form our daily higher low, are we closer to resistance breaking, or do we have to stay in a tightening daily range for a while? And if we look at the 4-hour time frame, we need a 4-hour trend change to be confident our daily higher low has been set. So until that 4-hour trend changes, we're not confident in our daily higher low yet. You can see every day, the last 4 days is a lower high, telling us that we're not confident that that low has been set yet. So certainly not game over for the bulls. We had a scenario after last video where the two scenarios were, number one, bullish breakout and continuation, or number two, we lose the 4-hour uptrend and we need to see a daily equilibrium play out. And now we're in scenario number two. I have had an ETH swing position I had an average of about 235 when I initiated that position, and I've been holding that for a decent amount of time at this point. But I want to talk a little bit about how I manage my swing trades, because I'm not a swing trader, but I will put those trades on in certain scenarios, but I trade around them. I'll have half of my capital in the swing position, I'll have half of my capital for trading, and what that allows me to do is just continuously lower the cost basis. So just as a rough example, in the last 2 days, I've traded Ethereum 4 times on oversold bounces and profited on all 4 of those trades. So what that does is it just lowers my break-even point. If I've got half of my capital in Ethereum with a 235 average, and I play an oversold bounce in Ethereum with the other half of my capital and make a $5 move, my break-even point on my swing trade just dropped down to 230. So it just keeps me extremely comfortable, and that's what I've been doing on these pullbacks. On the way up, when we would see 15-minute oversold climaxes on Bitcoin, I would enter Ethereum and do quick flips, and we'll just go over one of my most recent trades on Ethereum because I used Bitcoin as my guide on that play. So I was looking at this support level on Bitcoin, and we were in a scenario where we were in a very prolonged pullback, and RSI levels on the shorter term time frames were getting extreme, and it was then the hourly RSI that we were going off of to see a bounce going. We had the 5-minute, 15-minute, and then once the hourly RSI got oversold, that had me confident to be looking for a bounce. So the setup for the trade was looking here at Bitcoin and seeing that we had just 5-minute dropping down into oversold. We saw a significant high volume flush, and actually, you know what? I was watching it on the 2-minute time frame. I was wondering why there weren't enough candlesticks there. So I was watching it on the 2-minute time frame where we just kept dropping to lower lows. I'm on the wrong screen here. All right, let's get ourselves reestablished. Here we go. I was on the 5-minute time frame. Sorry about that. So the 5-minute exponential resistance. And then we just saw a lower high every single candlestick. 3, 6, 9, 10 candles in a row with just a lower high every candle. At that point, the 5-minute RSI is crushed down in the teens. The 15-minute RSI was also very beat up. That was down in the teens. And we ended up seeing, there we are, down in the teens. And the hourly RSI was just getting oversold. So I said to myself, okay, we have this key 4-hour support level, and we're seeing the bulls get extremely beat up. I'm going to use that support level as a potential climax flush. If we break that level, I would anticipate the last rounds of stop losses that have not triggered at this point to trigger, and for that to potentially be the climax point. So what I did is I was scrambling at this point because I was a little bit unprepared of establishing my trade game plan, and I decided I'm still going to play Ethereum because I had a swing position on Ethereum, and again, I have just been lowering the cost basis doing flips. So I want to talk about fees as well, because I disagree with a lot of people on fees, and it's fine if you have a differing opinion, but I have absolutely no problem paying fees as long as my trades are profitable. If I make $1,000 in profit and I have to pay $200 in fees to get it, I just made $800. If the alternative is not being able to get into the trade, I'm just out $800 because I wanted to save fees. I have never missed a trade thinking about fees in the cryptocurrency space, and I have paid a ton of money in fees, but I've also made a ton of profit in the cryptocurrency space. So in this instance, I saw the trade setup and said, all right, when we break that level on Bitcoin, I want to start getting into Ethereum. I saw how fast it started playing out. I market bought on Ethereum. I didn't have time to scale my bids in as I normally would like to do. So I just market bought on Ethereum. Let's see, that was down May 22nd at 6 p.m. Eastern. And what Ethereum did is it bounced obviously at the same time due to the correlations. And here we are. Nope. So here we were. This was the bounce. And I got in with an average in the 243s with my market buy. So with that market buy, 10 minutes later, the price is up at 249.69. I scaled out the first half of my position for a plus $3 gain just to be protective. And I scaled out the second half of my position for a plus $5 gain. So the total gain on the position was $4. And regardless of what the fees are, I made a trade. You might say $4 on Ethereum, so what? Big whoop. But that's over 1.5% gain. And if you're compounding your profits, and that's certainly something I do in the stock market world, if I make 1% a day and compound my profits, I'm going to be very wealthy for a long time. So don't let a small percentage gain sway you from a trade, because those 1 to 2% gains, if you just keep locking them in and compounding, that's the key. Compounding and using bigger positions as you're accruing that capital, it will very quickly become a very large sum of money. And it doesn't seem like that, but all you need to do is do the math of what compounding 1% a day would do. And that's a way that I personally keep myself from overtrading. If I've made my 1 or 2% on the day, I'm good to go. I'm done, and I'm not going to overtrade. And I'll take it next time tomorrow and do the same thing. So playing that oversold bounce using the market order, that ended up, let's just say it was, for simple math, let's just say it was a 300 ETH position. So getting a $4 average gain, that's a $1,200 profit trade in 10 minutes, and probably paid a decent amount of that fee for that exit, or I should say that entry of market order and then exit of limit order. But again, the fees were worth the trade because I would not have gotten in the trade if I tried to use limit orders, and I certainly would have not gotten the same amount of coins if I had tried to use limit orders as well. So that's my spiel on fees. Again, definitely worth being aware of, but as long as your trades are outweighing the fees, it's worth it, in my opinion. Someone once said that using market orders is just lazy trading, and I cannot disagree with that more, but that's fine. So, where do we stand? Bitcoin has bounced, the oversold bounce on Bitcoin. And thanks for bearing with me while I've found my spots on these charts as we're bouncing all over the place. So for Bitcoin, we're looking for a 4-hour lower high. That is the most clear pattern on Bitcoin recently, in my opinion, the 4-hour lower highs. Our last one is 80.44. Anything under 80.44 keeps that pattern intact. It looks like we're topping out right now, perhaps we're forming another 4-hour lower high at 78.85. Until we break this 4-hour lower high pattern, which at this point has been in play for 4 days, the bears have the short-term control. If we change the 4-hour trend with a higher low and a higher high, we're going to be looking at our daily higher low being established, and that's going to tell us the range is tightening even more, and our break is going to happen a bit sooner. Checking in on where Ethereum stands. Ethereum pulled back a bit more, and we'll look at ETH, BTC in just a moment. I ended up stopping out of my whole position of Ethereum on the second leg down. So we had the first pullback. I played an oversold bounce here as well, and still was in my swing position. And then I put my stop loss under 240, and I went to bed, and I put buy orders at 236.10, 234.10, and I'm just using rough numbers because I'm not always using 0.10 because people have caught on to that. But I put orders around 246, 236, 234. I had one at 230, 228, just anticipating that if we get another leg down, we're going to be reaching some extreme conditions, and I would want to be scaling in even though I'm sleeping. So I woke up and saw that my orders had filled. I had an average at that point of about 234, and I scaled out this morning, again, locking in those gains of a few dollars. So again, I'm not having these home run trades, but if you have 4 trades of 1%, a 4% trade over 2 days worth of time frame is certainly worth it in my opinion. So that's just my style of how I have been combining short-term trading with swing positions, but where we stand right now, I am all cash and patiently waiting for these daily ranges to give us a clear break. If these daily equilibriums break bearish, we're going to see Bitcoin consolidation on the weekly time frame, which is due for the first time. We have not consolidated on this weekly chart since 38.58. That was our last weekly higher low. Since then, we've seen 8 weeks in a row now with every single candlestick a higher low. So there's no pullback and no consolidation. Break the daily equilibrium, and we have to set a weekly higher low. And honestly, at this point, I would be much more comfortable with a Bitcoin bull with a weekly higher low of support established, because where we stand right now, I know we're overextended. It makes me less comfortable with the risk to reward of entering positions up here. And if we do get a bull break of the equilibrium, I personally would only be flipping it because of where this weekly chart stands. So Ethereum is in the same pattern on the daily chart of the equilibrium and still trying to hold the exponential support just like Bitcoin. Our lower high is set at 264.77, and the bulls are trying for a higher low at 222.88 compared to 222.88. Have to change the 4-hour trend. We rejected right off the exponential resistance. Remember our zoom out game. When the oversold bounces get going, we watch 5-minute exponential resistance. Change the trend on the 5-minute and get over exponential resistance. Zoom out to the 15-minute time frame. Then we watch the 15-minute exponential resistance. And look at us reject from it here. We get over it, so we zoom out to the hourly. Hourly exponential resistance, we pulled back for a little bull flag just under it. We got above it. Zoom out to the 4-hour exponential resistance, currently rejecting from it. Bulls have to change the 4-hour trend with a higher low and higher high to get over these exponential resistances and give us the daily higher low, maintaining the daily 12-period exponential supports. ETH BTC gave us a red flag. Very healthy daily consolidation to form a higher low. Bullish move up to try and see continuation on the daily time frame, and then we faded down to a lower low. Not a whole lot of bear follow through, but that's enough for me to lose a little bit of interest in Ethereum. The ideal scenario was for this trend to change on the daily chart, and keeping in mind that we're coming straight off the low, we don't have a daily trend change on ETH BTC. We need a higher low and a higher high to confirm that daily trend change, which we don't have. So that makes me a little bit less interested in ETH, and that also helped with my decision on exiting my whole position and going back to all cash, locking in profit from the last 2 weeks up, and just patiently waiting on the space. And I just did the same thing in the S&P 500. We had a daily equilibrium forming in SPY. It broke today, but just this tightening range. And it tells me if the range is tightening, pump the brakes. Knowing when to pump the brakes as a trader and knowing when to be aggressive is very important, because it keeps you from giving back your gains from when times are easy, and it makes sure that you're putting forth all of your aggressiveness and effort when times are easy, and that's when we have clear breakouts and more volatility as opposed to tightening ranges. LTC, so barely holding on to the equilibrium. We had already seen that it had a bit of a bearish lean on it just because we were much closer to breaking support than resistance. So we're holding $84. We did have some nice short squeeze action here. There was a dump here right there. Look at that move. This is on Coinbase, 85.65 to 92 in 10 minutes. Huge move. Really nice to capitalize on that. I chose Ethereum, like I said. That's just the luck of the draw. Couldn't have known that Litecoin would do that. In general, Litecoin has a history of having higher risk and higher reward and more volatility on the oversold dumps. So that definitely caught my attention, and I'll be paying attention to Litecoin more the next oversold bounce we get. But it's the same equilibrium, and the bulls have to change this 4-hour trend with a higher low and higher high to form a new daily higher low and try and stay within this tightening range. If Litecoin falls back and breaks 84 while Bitcoin and Ethereum stay in their tightening patterns, I'm going to make note of that, and that's going to shift my odds a little bit more in favor of the bears getting a break on those other names if we see Litecoin break bearish first. XRP, also in a daily equilibrium, very similar to Litecoin in its positioning. We need that 4-hour trend change to be confident a daily higher low can hold, and the 4-hour chart right now must form the higher low and higher high. You could make the argument it's a 4-hour bear flag. Bulls have proving to do on the 4-hour time frames across the board for us to be confident the daily higher lows are established. If we don't form 4-hour higher lows and we drop to lower lows, Bitcoin is going to stay in its daily equilibrium because of how much space we have to work with. Ethereum probably will as well, but it would be Litecoin and XRP, in my opinion, that would break their equilibrium bearish first and perhaps be a little bit of a canary in the coal mine for the other names to pay attention to. Checking in on Binance, bulls are on fire still. We had a bull flag and confirmed it, and now we got another bull flag attempt. All-time high resistance is 32.80, and short-term support is the low of today at this point. And looking at it on the 4-hour time frame, this is the range to be watching. If we can't break 32.80, it's a 4-hour equilibrium, and we'll have to form a 4-hour higher low compared to 29.67 and maintain that support, lose that support level, and further daily consolidation is coming, and we'll look to the 12-period exponential support if that level is lost, and the odds of it being a bull flag would decrease if that level is lost. But we can say pretty confidently that as long as 29.67 holds, a bull flag is what is shaping up. So extremely healthy for Binance still at this point, and for everybody else, have to change the 4-hour trends in order to be looking for a daily higher low to be established. If we get that daily higher low, continued tightening daily equilibriums, and we're going to look for a break later this weekend, probably end of this weekend or right after the weekly candlestick closes. So I appreciate you watching. Again, back to all cash, patiently waiting. Make sure you got your stop loss levels in place. Make sure you got your game plans in place. Do good things on top of it. Let's end with some praying mantis babies.